Hi, my name is Christian Waldegrave, Head of Research at Teekay, and this is our conventional tanker market update for April 2015. Now, tanker rates in March stayed relatively firm compared to where they were in February. In fact, if we look at crude tanker rates, they were about $40,000 per day for VLCC, about $50,000 for Suezmax, and about $30,000 for Aframax. And that's pretty similar to where they were in February, maybe slightly lower, and that's because some of the seasonal factors which were supporting rates in February just died away a little bit in March. Some of the weather delays went away in the US Gulf. And we did see the onset of refinery maintenance in Europe, which started to reduce demand a little bit for crude tankers. However, if we compare the rates to this time last year, we can see that rates are very firm compared to what we've seen in the past. So in March of last year, crude tanker rates pretty much across the board were about $15,000 per day. And it was pretty similar in 2013 and 2012 as well, that we had this big seasonal low in March, which carried on through April and May. And we're really not seeing that this year. And I think what's happening is that crude tanker rates are being supported by low oil prices. Oil prices have come up a little bit from where they were in January and February. The price of Brent is now between about $55 and $60 per barrel. But that's still low enough that it's supporting some extra oil purchasing for stockpiling purposes, and it's also giving the refiners pretty good margins, so it's encouraging them to increase refinery throughput, which of course creates demand for crude tankers. And so that's what's giving tankers support through the spring months, when normally we would see the rates start to die away a little bit. Looking forward to the next couple of months, we think the rates will stay strong, and in fact there is some scope for oil pricing to come down again in the next couple of months, which could give further support to tanker rates. Firstly, refinery maintenance will start to ramp up through April. In Europe, the refinery maintenance season peaks in April at about 1 million barrels per day of capacity offline. And in Asia, the peak comes in May, when there'll be about 1.8 million barrels per day of refining capacity offline. So with oil production being at very high levels, Saudi Arabia is producing about 10 million barrels per day. US production is still very high. We haven't seen US production levels come off yet. And with refineries going into maintenance, that should create more surplus of oil, which should put some pressure on oil prices and create some support for crude tankers. Probably the biggest thing that might impact the tanker market in the coming months is what's happening in Iran. So the sanctions on Iran may get lifted in the coming months because of the agreement that's been reached between the P5 nations and Iran. And that could lead to a resurgence in Iranian oil production and therefore oil exports in the coming months. It's not quite certain when that might happen, but some analysts think that within 6 months of the sanctions getting lifted, Iran might be able to increase its exports by up to 500,000 barrels per day. And after a year to 18 months of the sanctions being lifted, Iranian exports could be up as much as 1 million barrels per day from today's levels. Now, what that means for the tanker market, we're not sure at the moment, because it depends what happens to that oil and where it moves to and what it displaces. The usual home for Iranian oil is in the Far East, in China, in India, Japan. So if those countries start to take Iranian oil rather than West African oil, that could be a slightly negative crude tanker demand point. But if it's just displacing other Middle Eastern crude, it's somewhat neutral. And what it will do is, as that oil comes on the market, it will put further pressure on oil prices. And what we might see in the coming months is, if the oil prices do get depressed, we could start to see floating storage come into play again, if that contango in crude futures starts to steepen. So all in all, I think looking at the next 2 or 3 months in the crude tanker market, we think that we're not going to see the seasonal lows like we saw in the prior 2 to 3 years. We'll probably see some fairly good rates continue through to at least June, July time. And even in the second half of the year, it looks pretty supportive, depending on what happens with OPEC policy and what happens with Iran. And as we've touched upon in previous updates, the fleet supply side still looks pretty good through this year. Only about 2% fleet growth this year, and most of that's weighted towards the products. So it's a pretty good picture for 2015, and then into 2016 as well. If these factors hold, fleet supply is still going to be low in 2016. And we think that the market has some legs to run beyond just this 2-3 month period that we've seen since Christmas. So that's our update on the conventional tanker market, and we'll talk to you again next month.